Yo, what's up, Toastie?
How
Toastie,
you
what's
doing?
up?
How you doing, bro?
Well, brother, how are you? I'm good. Thanks for
Happy to
asking.
hear it. Happy to hear it. Thanks for coming. I'm gonna mute everybody really quick, but you can unmute
Yeah,
after that. Give me one sec.
okay.
How's your week been, Dennis?
Good, brother. Good. How was your weekend going?
Not too bad. It's getting sunny where I'm at, so I'm liking the weather a lot more than it's been the last 2 weeks.
Where are you right now?
I'm in San Diego, Southern California. What about you?
Oh, I'm in New York, brother.
Oh, so it's probably
Yeah.
hot out there, huh?
Yeah, the weather just got good today. It was sunny around the afternoon. It was a little cloudy in the morning.
Yeah. Have you seen the protests in LA?
Yeah, man. That's I don't know. It looks kind of I
It's
don't it
kind of
looks fake. It looks like staged to me. Like it looks like 2020. Like I'm getting
dude,
those vibes.
I
I
didn't
don't know.
know. I found out those were going on like a day or two ago, and it looks pretty wild.
Yeah, I don't know, man. Like I try to stay away from the news, like those type of news.
Right,
Like it's very negative. Like I don't know. I have opinions, but like it's just it's just stuff that it should be avoided.
right. And it's all very
Yeah.
biased too, whether you're
Yeah,
with them or against them, doesn't really matter. But either way,
exactly.
whatever viewpoint you have is going to be supported by whatever news you look at. So it's kind of like it
Yeah,
just, I don't know. It's a
yeah.
tough situation for sure. But
It
yeah,
is,
it's pretty
man.
wild.
It is.
Interesting stuff in Southern California, that's for sure.
How about with trading? How's your trading going, bro?
It's been good. I've mostly just been trading shares for the last couple months, really staying away from options for
Oh,
no
okay.
specific reason. Over the last like 6 months, I've been doing a decent amount of stuff in my personal life, getting some licensing for engineering. But I kind of got through that recently.
That's what's
Um,
up.
Thank you, bro. I appreciate that. So yeah, kind of got through
That's
that
good.
recently, and yeah, I've mostly just been focused on shares though, long-term investing. Well, not really long-term investing, but yeah, mostly shares. The thing that I trade the most right now is really CRWD. I don't really trade much. It's just CrowdStrike. So that's been a pretty simple one.
Brother, if it's working out for you, bro, keep on doing it. That's what
Uh,
matters.
Dude, I mean, when I first started, you should have seen my portfolio. The first few months I started, I was in 10 different positions in 10 different stocks. And ever since I learned how dumb that was, I have basically vowed to never get myself in that situation again. So I like to keep things simple. I like to keep things easy to manage and easy to remember where everything's at. And if I like to try to have the levels of the names that I'm trading at memorized and just be real familiar with what I got in the portfolio. So it's like second nature.
That's nice, brother. Do you don't trade no options at all? Like none, zero, or do you like dibble dabble?
Right now, the answer is none. Again, for no specific reason. It's just mostly a time thing. But I mean, I have for the last 4 years outside of the last 6 months. So
Okay.
I guess you could say the answer is no right now, but I have nothing against them. The one thing that I don't trade anymore at all is same days. I don't trade that anymore.
Okay, that's smart to hear. Because I need to stop doing that. Need to swing a little more.
To each their
How's
own,
the
right? Like, some people are real skilled at it, but I'll tell you right now, the vast majority of people aren't, no matter what they tell you. Um,
yeah.
the one person that I 100% know is incredibly successful with same days, and only because he's a scalper, is River, which I've realized now that his name has been stuck
Yeah.
as reindeer for the last 6 months. But yeah,
Yeah, I like the way how River trades. We have like a similar trading strategy, you could say.
that's good.
I like the way he trades, and Flips is like more like Flips. He's a little more
Right,
aggressive, and
right,
which is good too. Which is good too. Sometimes you do got to get aggressive to get what you want.
100%.
So yeah, but with River, I relate to more River
Good,
for
good. Yeah,
sure.
he's definitely a really good mentor. So take advantage of all his classes and things he has to say too.
Yeah,
Hey, Colin, how's it going? Sorry, I didn't see your message
yeah.
earlier. All right, well, I'd love to catch up with you for the next hour too, Dennis, but
Let's do it.
fortunately, we got some stuff to talk about. So,
Yeah, we're
yeah,
here to learn, brother.
let's do it. Yeah. So, with that, let's get started. So, this is going to be the fourth lecture tonight in the volume price analysis course series. We've done three so far. We talked about just kind of general introducing the concepts. We moved into the basics of volume price analysis. Last week, we started on some applications, so started bringing some of the concepts that we're talking in these lectures about, and then really focusing on chart examples and looking through charts the majority of the lecture, I think, last time. And now we're going to expand the volume price analysis concepts and kind of connect them to different ideas in technical analysis. So we'll talk about things like the volume profile, which is something that I used to spend a bunch of time in here talking about, and not so much anymore, but super important part of the way that I like to review charts. Anyway, let's get started. So just a couple things before we get started. I know people like Dennis who are in here every night and JT too. I see JT in here. Hear the same thing from me every time. But as always, guys, if you have any questions, comments, anything really at all, go ahead and just unmute your mic and interrupt me. Start talking. It's not rude. Just let me know what you got to say and what you're curious about, and I'm happy to just stop whatever I'm doing and address that. Outside of that, this is the fourth lecture in a longer course series, so there's a good chance that if you haven't seen the prior three, I'm probably going to talk about things that aren't super maybe intuitive to you if you haven't learned about them much before. So I'll try my best to keep that in mind. But if you have anything where you're real confused about it, or you want me to kind of touch on it again, or give you a different explanation, just let me know, and I'll definitely get back to that topic, and we can take a look at it in a bit more detail. And then, as always, at the beginning of this lecture, I like to shout this book out because definitely a good chunk of the content is basically peeled directly out of this book. I think we hashed it out this last lecture. I think it's actually like a $34 book, but I like it a lot. So if you are interested even more about what we talk about in these lectures, highly recommend grabbing the book as well. Yeah, check it out. Okay, so again, kind of as I mentioned, we are on lecture 4 tonight, which is going to be advanced volume price analysis. So we're just going to start to connect the concepts of volume price analysis kind of outside to other sorts of technical analysis before we start talking about how to incorporate this into a real trading strategy in our next lecture. And then I'm hoping in 2 weeks in our kind of conclusion class, we have what I'm calling like a VPA workshop, where basically what we do is kind of talk about how we've been using these concepts. Hopefully, some of you guys are at least starting to think about these in your day-to-day trading, whether you're using them in the trades that you execute, or maybe it's just something like a thought in the back of your mind as you're reviewing charts. Either one, definitely would like to just kind of have a more open discussion in that lecture on that, and maybe we can share some ideas that everybody can learn from. And then just to recap on the goals of the course, first one is to develop traders who are obviously successful and have a clear understanding of the fundamental principles of volume price analysis. So again, the goal, hopefully now it feels pretty accomplished. Hopefully you guys who have been through the first 3 lectures feel like you have a pretty good idea on what volume price analysis is and how it works. And if you don't, feel free to let me know and we can rehash anything that we need. And then the next piece of that goal, which is really the latter half of these courses or classes, is to teach you all how to apply the techniques of volume price analysis to help create or supplement your existing trading system. So the goal really for the end of this course is that you guys are all familiar with volume price analysis to the point where you can actually apply it in your day-to-day training or trading. And whether you stick with it for the rest of your life or not, that's totally up to you. But it's all about exposing you to something new, something that's proven and tested. Yeah, that's basically it. Any questions before we summarize what we covered last time? Cool. All right, so let's talk very quickly about what we covered in our last class. I'll ask the question to all of you before we get into it. How many of you were in our last class? And how many of you, I guess I'll ask a different question. How many of you haven't attended any one of these classes at all, and this is all kind of brand new to you.
I was here last week.
I remember. I remember. Cool. All right, a couple people here last time. Was not here. Colin was not here, but Colin, I think you were in. Were you in here earlier? Can't remember. Will I ever do a futures class? Me personally, I probably won't do a futures class, at least not on really trading them because I have never traded futures and probably never will. I mean, if we have time at the end of the class, I'm happy to kind of explain them to you and give you a little bit more background, but I probably won't do a class on trading them because I don't trade them. Cool. All right. So we got some new faces, and it looks like a lot of people were here last time. So hopefully the majority of this is familiar. But for those of you who weren't here last time, feel free to just let me know if you'd like me to kind of touch on anything else. And if you have time at the end of the class, hopefully we'll be able to get back to that. So the first kind of concept that we talked about, and I think Dennis was the one that wanted the side-by-side examples or the side-by-side questions. This is the same one as last time, but hopefully you appreciate it. Anyway, maybe it wasn't Dennis. I don't know if it was you. Anyway.
Yeah, I mentioned it.
Okay, cool.
Thank you.
You got it. Yeah. So this was the kind of first example that we talked about, which was labeled as testing the market. And as a reminder, we have this example on the left where we see, and let me open this up in a way that I could annotate it as we go along. I'm sure I could do it in Zoom, but I don't know how to do that. So I'm going to do it this way instead because I know how to do this. Okay, so we had this example last time where we discussed this concept of testing the market and some kind of characteristic things to just take note of before we get too deep into it. The first thing to note is that we have rising volume as price moves higher. So we can see as price trends higher, we see that buy volume generally increase, right? And we have this kind of single outlier bar right here. But for the most part, as price trends higher and we see these buyers, the amount of buying volume trends higher. And all of a sudden, once we get to some horizontal resistance level, we see an increased level of selling volume. So this is a pretty good example of a pretty strong rejection of resistance. And if we look at the example on the right, we can again take another screenshot here so I can annotate a little bit better. So we take a look at this one on the right here. We can see they both have very similar characteristics for every bar except this last one, right? If we compare everything except this last bar, the volume is generally pretty similar, right? We can see we have that same trend in increased buyers as price moves higher, right? As price moves higher, we see that increased amount of buyers. But the main difference all lies in this volume bar here and this candle here, right? And we talked a little bit about this. First of all, on this example on the left here, when we see this red bar, we have a massive amount of sellers looking to basically exit their position. Where on the example on the right, we see a very small amount of sellers, right? And we also see this long downside wick as well. And another way to think about this is you can imagine, let's say, for example, we're at, a baseball game, right? And the top of the ninth hits, and basically everybody knows that the game's over. So everybody rushes to the exits. And you can see this is kind of what's going on, right? Everybody knows, hey, it's time to sell or the game's over. So let's get out. And that's exactly what's being reflected in volume here. Whereas in the example on the right, maybe it's that same baseball game at the top of the ninth, but it's real close. And maybe it's looking like it's going to go into overtime or extra innings, that I think is what it's called. So people aren't really leaving. Some people had to leave. They had other commitments to get out to. But the majority of people are hanging out. So people are ready to kind of stick around for more. And hopefully that analogy made sense. But in general, long story short, the example on the left exhibits a large group of sellers trying to exit their positions at resistance or start new short positions, where the example on the right shows us at that exact same level of resistance. However, we're not seeing people run for the exits. We're not seeing people sell or exit their positions, which mean to us that in general, sellers are weak in whatever environment we're trading in. And there's one pretty good example that came up recently on the SPY that I was actually just looking at. This is the exact same idea, right? We can see this pretty closely. And let me just remove everything real quick. So this is just on the SPY, so nothing too fancy here. And if we just draw this horizontal resistance level right here, notice this example. This is perfect, right? The first time we come up to this level of resistance, notice this elevated level of selling, right? This is that first test. Then notice the second time we test this resistance, right? We break above it. And then check this first kind of retest. Not much selling, right? I will say for sure this breakout definitely did look like a failed breakout. So I would argue that the principles of volume price analysis failed here. But this is the same idea, right? The first time we came up and tested this level, we got a large amount of sellers. The second time we came up and tested this level, we got a whole lot less sellers, and we actually made it above, right? And even though this bar looks bad, we're still setting higher lows and higher highs. So not necessarily the real or the best example, but so the large wick down on the right, what does that represent? Yeah, that's a great question. So hopefully I'll just take a quick pause. Well, let me answer this question and we'll take a quick pause. So large wick down on the right, let's just kind of talk through that. So let's just look at a real example, right? I'm going to use this candle here because this is a pretty good bar. So let's just draw a horizontal level right here. And the reason that I'm drawing a level here is this is a pretty significant spot, right? Hopefully a decent amount of us are familiar with kind of how to draw and find and identify key levels. This is a really important level because this is exactly where price closed basically the day that tariffs were paused. So I left some notes on my chart. This was the day that tariffs were paused for 90 days. So a really significant level here, right? This entire correction started because of tariffs, and now we're seeing tariffs pause for 90 days, right? And we've talked about this in bear market courses before, but the main reason a bear market ends is because the fundamental reason they began has resolved. And seeing tariffs paused is exactly what investors would be looking for. So this level is going to be big, right? The day we close, or the price that we close when tariffs were paused. And you can see how we kind of reacted at this level. And this bar here, right, this specific green candle has a decently long downside wick, right? So what does that mean? Well, let's take a look. What this means is that at some point during the day, this candle looked a whole lot like this. And let me see. At some point during the day, this candle looked like this, right? It looked like it was going to be a big failed breakout over this level of resistance, right? This bar doesn't look good, right? We had a nice move above resistance. It looked like we were making progress. And then all of a sudden we gap down and we're at lows of day, right? And sellers were in control as well. But it closed looking like this. And again, remember, the market is like a game of tug of war, right? It's buyers versus sellers all the time. And what this means is that sellers basically had a good shot at having this kind of failed breakout below this 548 area. But buyers ended up being stronger on the day and closed much higher, right? And also above this level of resistance, which is why it's so important to pay attention to how candles close, right? Because candles can look pretty bad when they're still open. But the most important thing is what they look like when they're closed, when the period is complete, to prevent you from reacting to scenarios that maybe look bad in the moment, but actually don't really matter. Does that help with your question, CD? Does that make sense? Kind of why that lower wick is significant. And I know Dennis had a question about that last time too. So I hope that further clarified that question that you had last time. Cool. Okay. And then the other example that we talked about, well, we talked about a couple different examples, but Dell was one of them. And we talked about how it exhibited something similar, right? Not quite the same thing, but the same idea, where after repeated tests of this 150 level of resistance, we saw declining selling volume, right? So I highlighted the selling volume bars here. And notice it's not a perfect trend lower, but you can very noticeably tell the amount of sellers decrease, right? And also we're setting higher lows as well. But the first time we hit this 150 level, we get a massive influx of selling pressure. Then the next subsequent times we hit that level, the amount of sellers drops and drops and drops till eventually we end up gapping up and retesting this level as support and ultimately moving higher. So seeing that amount of sellers at resistance decrease is actually typically a very bullish indication, right? While we're still sitting below resistance, it's a real good indication to us to start to see the amount of sellers in the marketplace slowing down, right? And this is what we've been continuing to try and drive home is that volume ultimately is what move markets, right? Because volume represents real transactions, real buys, and real sells. And volume bars can only show up with some amount of significance if large players are making trades, right? We talked about the monetary value associated with volume, right? It's not just a number on a screen and the amount of shares that moved, right? It also represents a dollar value. So when you see 250 million shares of SPY bought in a single day, I can't remember what the math is. We multiplied it by like 500. I think, let me try and do it roughly. I think that represents, I need to just, I need to do the calculator. I think it's something like $25 billion, 250, 0.00000 times 500. Okay, never mind. I'm way wrong. $125 billion was traded on a single asset in a single day, right? And again, I've talked about this multiple times, but volume is so significant because it represents such massive amounts of money, right? $125 billion is an insane amount of money to move in a single day on a single asset, right? Think about the amount of money that's in the entire market that moved on this day, right? The S&P traded 125 billion. We probably had multiple trillions of dollars that exchanged hands on this day, when on average the entire market maybe trades a couple hundred billion per day, and all of a sudden we had multiple trillions exchange hands. It's not something that happens for no reason, right? That's big players entering a position, right? And we talked about this other analogy where you could think of large institutions like an elephant in a bathtub, right? All the water is going to splash out, the tub's going to break. You're going to know that an elephant was in your bathtub. But people like you and I, it's like dropping, a speck of sand in the bathtub. You can't even really see it. It doesn't make a difference. But the whole goal of traders who are focused on volume price analysis is to identify when large institutions are entering and exiting their positions and essentially follow them, right? Because they're the ones that are making the trend in the market. It doesn't just appear. All right. So we talked about this Dell example this last time, and we talked about a couple more on the chart, and hopefully I recapped some of the analogies that we referenced. Any questions before we start to talk about a little bit of new material? How's everybody feeling so far? I'm hoping those who have been in the last couple classes are starting to get it, starting to become, a little bit more automatic, the way we're thinking about these kind of concepts. How are we feeling so far, everybody?
Isn't it feeling pretty good?
Thank you, Don. Appreciate it. Dennis is feeling good. All right. Cool. Well, yeah, as always, guys, if anything else comes up, feel free to just let me know. But in the meantime, let's keep rolling. Okay, so we have a couple advanced applications that I wanted to cover. Again, not necessarily directly related to volume price analysis, but definitely correlated to volume. So the first one is going to be the volume profile. And this is one that I used to talk about in lecture basically every single week, and kind of has stopped because I felt like I really kind of wore that out. But the volume profile is a very fascinating way to kind of look at volume in a different way. So conversely, or compared to our typical volume bars, right? We know our typical volume bars at the bottom of the chart show volume that was, or shows the amount of shares that were traded during a specific time frame, right? So, for example, a given candlestick has a correlated volume bar, and that shows the amount of shares that were traded in a given day. What the volume profile does is it shows us the amount of shares traded at specific prices, right? So it's no longer correlated to a specific day or candle. This shows us the amount of shares traded at a price. And the reason this can be pretty significant is it helps us visualize supply and demand zones. So for example, if we just give this full screen again, we can see where these volume profiles really stick out and kind of protrude. These are incredibly significant areas of trading activity, right? These are where funds are most interested in trading a given asset. And there's a couple different terms to kind of help clarify what this all means. So sometimes you'll hear this term or this kind of area referred to as a volume shelf. I think the technical term for this is a high volume node, also abbreviated as HVN, but for the purposes of this class, we'll call this a volume shelf, right? Because it kind of looks like, a nice little shelf protruding from a wall. And this area here is typically referred to as a volume gap, right? And hopefully those are pretty intuitive names, right? The shelf sticks out and the gap basically recedes. So there's kind of nothing there. The next most important thing to be mindful of is what's called the point of control, or also abbreviated as POC. And you can see that's highlighted in pink. So what do these three things represent? Well, again, hopefully it's starting to make a little bit more sense, but the shelf represents an area of large amounts of trading activity. So for example, on this chart, it generally shows that the area between, we'll just say 540 and 550 are incredibly popular for large funds to trade at, right? So this is going to be an area of support or resistance, right, depending on where we're trading. And conversely, right, this gap basically shows that, large money isn't really interested in trading in this area. They haven't really traded here in the past, and it's not likely to have too much significant support. And you can generally see that from the chart, right? If we look to the right from the gap, there's not really much, significant or strong support in this area. Maybe outside of this spot, literally right there. Not too much support in this area. And then finally, the point of control in general is where the most trading activity has occurred. So we could see in general, we see probably a decent amount of high volume days real close to this area. I can see 3 high volume days right here that are all right around it. This high volume day, which goes through it, a bunch of wicks off the point of control. So the point of control is going to represent the strongest area of support or resistance on a given chart. Does that make sense? So our terms make sense so far. Viral says, how do you trade point of control and value area and volume profile entry at shelf? Yeah, very generally, Viral. You want to treat these kind of shelves as areas of support or resistance. That is the simplest way to think about it, right? Because that's really what they are. And I believe you abbreviated VA for value area. The value area, depending on how you configured it, is kind of like a zone of probability. So I don't remember specifically what the default is, but I think typically, again, you would treat those levels as support and resistance with the mindset that buys within the value area typically correspond to a more value, right? It's going to be where more people are interested. Whereas once a name gets outside of that value area, in general, you might expect, it's a little bit more extended from strong support. Cool. So in the gaps, are you looking for bigger moves? Yeah, Colin. So you hit the nail right on the head. And I can't remember if I have, oh no, I don't have any slides on that. Yeah, so you hit the nail absolutely on the head, Colin. In general, volume gaps are going to represent areas where price can move much more rapidly. And let's see if we have any just recently on the SPY. Let's see, let's take a look at this. And let me increase the contrast real quick so we can all see the volume profile better. Or decrease this, I guess. Cool, that should help. And let's look at the last year. And let's look at just the volume profile with no moving averages. All right. I guess we got to zoom out a little more. And mess this up. I love that. Cool. So hopefully that's a little bit more visible. So let's just clean this up really quick and mark these volume gaps, right? So this is going to be a volume gap. This is going to be a volume gap. This is going to be a volume gap right here. It's going to be a smaller one. This is going to be a big one. Cool. So starting on the left here, right, this is a pretty obvious volume gap. As you can see here, we basically moved directly through this zone and never came back, right? So there wasn't really much trading activity that occurred down here. So more than likely, right, if we ever come down to this 460 area again, which we got kind of close, the first spot where you're going to have some shot at seeing support is going to be these pivots here, right? Which is right where you start to see that shelf start to show up. And same thing here, right? Let's even start marking these levels, right? And see if anything interesting shows up. So we have that spot here and this spot here, which are kind of the boundaries of the volume gap. And again, we can see on this volume shelf here, we consolidated for a while, which is why the shelf got so large, right? We spent a long period in this area, which gave us a lot of time to basically build that shelf up. So let's draw a level on the top of that shelf. Let's do this here. This one's a little bit messier. Like the big gap ends here, but it kind of slowly starts to get into a stronger shelf. So we'll just wait until we get up to here where the shelf really starts to develop and draw just another level at the bottom of that. We'll draw another level at the top of this shelf here. And again, all I'm really doing is just looking at price that's close to these volume shelves, right? This is where, oops, let's go back here. Duplicate that. Let's put another one at the top of this shelf, which is pretty located. And all I'm doing is just adding levels outside of these gaps, just right on the shelves. Put one right about there. And let's just zoom out and see how those look. So in general, right, you can see how prices kind of reacted to these areas, right? So you can see this one, we got kind of close there, but there was a lot of volatility going on here. So I can't really attribute too much of that to this specific zone. But we can see where this shelf started is where we found that first major support. And we also found some support in this area after, and it's definitely a little bit messy, but these shelves are generally going to act as larger areas of support. Where you can see through these gaps, we're typically able to move a lot more quickly. And this is in a pretty normal environment. Like it's hard to judge volume shelves and gaps when the VIX is at 50 and 60 like it was in this zone. But we can see, like, for example, here, right, this volume gap, we made it through in 1 to 2 days. This volume gap, a single candle got through the entire thing. Anyway, that's the big idea with volume shelves and gaps. It's typically used to find areas of strong resistance or strong support. And if we're looking just in the short term here, we can decrease the time frame and just take a look at where the most important areas are now, to which we can see massive volume gap in this area, which makes sense because we gapped directly through it from a price action standpoint. No real significant shelf in this area because we didn't spend too much time down here. And what we really started to build out is a shelf in this area, which is now acting as support for us. And we can see, at least for this last 6 months, we got a nice wick directly off that point of control, nice and strong support there. And we've been inching higher after that. So not always going to be perfect. Again, just something to add to your toolbox, right? It can be a really nice tool to really fine tune your support and resistance levels. And some of my favorite timeframes to look at the volume profile are on the weekly. So for example, let's take a look at something like CRWD on the weekly and see how this looks. So I love paying attention to these weekly point of controls because it typically ends up being a really nice place to be a buyer. And in this case, we definitely moved a lot lower than the weekly point of control. And also, this is the 5 year, so let's probably take a look at the 3 year and see if we can find something a little bit more recent. Yeah, even that's still a little bit low. Let's look at something like a Microsoft. That should be pretty good. Yeah. So yeah, look at that. I already have this level marked. So this weekly point of control on Microsoft is a level that I had marked for a while because we've been trading around it so significantly. And you can see I already have that on the chart, and you can see exactly how we reacted to this level. So we had a couple kind of failed breakouts over it with a decent amount of sellers here, and ultimately ended up moving lower, to which we later gapped above it and basically never looked back. So this is definitely a pretty big inflection point to watch out for. It's the most important level of support and resistance typically on a chart. And if you don't consider it the most important, it is at least the strongest. Do I create volume profile to swing low to swing high? Which time frame do I prefer for entry exit? So at least in terms of how I set the volume profile up, I'll show you the settings that I use in here. All I really do is change the price per row height mode from automatic to tick size and change the on expansion from yes to no. And that's basically how I get it to look the way it does. Outside of that, I don't really control the highs and lows of the volume profile. It doesn't work like that, at least for thinkorswim. The only way to control like the time period of the volume profile, like the data that it's showing, is by the amount of data that you have on the chart. So this is the volume profile from the last 3 years. If I do year to date, this is the year to date profile, basically. So that's the main way I can kind of manipulate the data that I look at. And then in terms of the time frame that I prefer for entry exit, this is definitely a question that I could either answer in a minute or a lecture. So I'll stick with the minute long answer for now. In general, the time frame that I prefer to determine my entry and exit is always going to be either the daily or the weekly. That's generally where all of my key levels come from. However, in terms of actually executing that entry and exit and like watching price around it, I'll look at, the hourly or the 15-minute, or rarely the 5-minute these days, but sometimes the 5-minute as well, just to kind of see how price is actually reacting to that level. Sure, Colin, I can bring that up for you. Are you just talking about like this, like everything that I have built out here? Cool. All right. Would I be able to chart RTX? Yeah, if we have some time at the end, we could definitely take a look at that. All right. So the next thing is the idea of volume indicators in general. Now, this is just a real simple one that I tossed together. It's not necessarily the gold standard, but there's a lot of different volume indicators that you could use to identify exactly what volume is doing relative to an average or from a daily standpoint. And I want to just talk through a couple of these. So I have the PowerPoint slide built out, but I really want to just focus on the chart for this real quick. So we'll just keep working on our Microsoft example. Why not? And let's look at Microsoft over the last few years. Oops. Let's clear this out. So a couple different types of volume indicators. The first and most simple way to really analyze volume is by just tossing a simple moving average on it. So the way you could do that is just search that up in thinkorswim, move it down to the volume subplot, changing the price to volume, and you could set the length to whatever you want. In the past, I've really only used the 20, 50, and 200 length moving averages, but you could definitely do whatever you want. And this just gives us a really simple way to identify if volume is high or low, right? So if it's above this average line, it's going to be considered high, right? If it's below this line, it's going to be considered low, right? Pretty straightforward there. So we could pretty quickly see all of our high volume spots, right? A lot of these correlate to an earnings release, but some of them do not. Like, for example, this bar here was super high volume right as we were sitting at resistance, and it was a nice buy bar as well, which that should be pretty suspicious, right? That should be something that catches your eye. Same thing with this one here, right? Decently high volume as we creep up on this level here right before earnings, and also a lot of high volume down here, which was also news related, but still definitely interesting. So that's kind of the first way you could start to analyze volume, is just with a real simple average. And I want to even see what else, and because I know there's a couple more. Let's see what this one is. I don't even know. Okay, yeah, this is what I thought it was. So this is another indicator that River uses a lot, which basically splits up the buy volume and sell volume in a given day. So it kind of shows the imbalance between the two. So if you go to that period, you could basically change the period that it's referencing. So right now it's looking at the volume over the entire day. You could set this to the 1 minute. And if we go on something like ES that actually has 1 minute volume right now, we can see the amount of buyers and sellers changing live in real time. So we can just watch that real quick. So you can see, I'll try and make it so it's all in the same frame. So that'll hopefully help. It's not a perfect calculation. It does its best. I'll just put it up there so we can all do our best to see. So generally when we see that buy volume tick up, we see price move higher, and price moves lower when we see that sell volume move down. It does some weird stuff sometimes. Like you can see sometimes that sell volume goes to zero because it doesn't really have the calculation finalized until the bar closes. So there's some funky stuff that happens on this one. But this is generally the big idea. So I think what it's really doing is it's a ratio of the total volume. So it calculates, it takes in the total volume. So if you add these two together, it'll equal 126. And basically, I believe what it's doing is it takes the difference between the open or the high and the low and calculates a ratio of that, and allocates it to either buyers or sellers. So this one right now, there's no lower wick, and it's allocating all the volume or attributing all the sells. And once we get that lower wick, it starts to attribute some of the volume to buyers. So anyway, does that make sense so far? Well, I guess it's not super important that makes sense. It's really just giving you guys a little bit of awareness on some different indicators. So I'll make sure I share this one real quick because it's a real simple one, and I'll just put it in the chat. Gotta love the names of those other indicators. Those are good ones.
River value. River, Mr. River, busy with Tostie. Hey, yo.
I gotta send him a screenshot of those later. Those are good. I haven't seen those in a while.
That's crazy.
I haven't seen those in a long time.
Who wrote those? He wrote them?
Not me. Not me.
Not
Not me. I don't remember what those are. I don't want to pull those up. And I think I have a couple other interesting volume ones that we could look at. So let's just see if there's any other custom ones. This is Assassin's volume. This one's a wild one. I don't know if I can share this one, honestly. I guess I probably could if you guys are interested in it. But what this one does is it like has a bunch of different colors that calculate. So it has this blue color if it's like above average volume, and it has this deep red color if it's below average. I never really fully got a grip of this one, and it's got so much other stuff that it does. If I show everything, I'll just show everything real quick. But anyway, the big purpose of this section of the lecture is to just kind of show you guys that there's a lot of different interesting things that can be looked at with volume. Some of these indicators can make things maybe more confusing than it's worth. But mostly it's just important for you to know that, they exist. If you're interested in kind of getting deeper into the sort of indicators that you're using for volume, certainly be my guest. But I will say I can't trust enough that it is important to kind of master the basics of volume and just understanding kind of those differences in relative volume before you try to get too crazy with the indicators.
Toast, you have a question.
Yes, sir.
It's gonna be a little off topic, but for timing sales and volume, do they correlate together if the stock is gonna move up and down?
What do you think they would do?
So so most of the time I started looking at time and sales with volume as well. I do see big like these corporations, like they'll have a lot of like shares or contracts, and I'll see it disappear, and the volume of sellers will rise and it'll go down. But
Are you
it's
talking
like
about time and sales or level 2?
yeah, time and sales with volume together.
So let's do our best to kind of handle it's going to be hard to do. But let's just start our kind of calculation here from this line. Oh, yeah, this is going to get hard. So anyway, let's go to a shorter time frame candle. That'll probably be easier.
Okay.
Let's do let's see if we can do, I don't know if we can do like a 30-second candle. Yeah, we can. We'll do a 100 tick candle because that will, in theory, get us close. So 100 tick candle, this is going to be pretty brief.
Okay.
This might be even a little too confusing because it's going to even be hard for me to figure out the time that this is lasting. In general, though, I was going to try to answer this with a question, but it's honestly moving a little bit, or an example, but it's honestly moving a little bit quicker. It's a little too early in the night for some reason, or too active. Long story short, time and sales is basically volume that's happening in real time, right? Time and sales, if you added all these individual transactions up, you'd get the volume in a given day. And I would love for us to be able to do that. I don't know if there's anything. I could probably add something custom to like totalize this for us. but I don't have that offhand right now. But let's just look at the 1 minute and we can hopefully maybe approximate it. I want to see like a big trade come in. I'm hoping we could see like a big trade come through the time and sales, and you could see that boost in volume really quick. But all time and sales is like this is the real transactions, and this is the total amount of transactions. That's all it is, right?
Okay.
And the candles just break it up by time. So right now, there's been 36 ES contracts exchanged in the last 1 minute, right? And this minute's almost over. And if you scroll down and you added all these up, it would add up to 36, right? And you can see very generally, let's just highlight all these. I don't know if it'll tell us the amount of rows here. No, I can't even highlight multiple. I'm trying to do things I've never done before. But anyway, if we assume, again, this is a pretty strong assumption, but if we assume there's like about 50 rows being shown right now, and I don't know, it takes about a minute to fill 75% of them. That's about 30, 40 shares. And every minute we've gotten about 50-ish shares. So anyway, I'm making a lot of assumptions that are probably making it more confusing than it's worth. Long story short, this is the real-time volume. This is the transactions that have actually occurred, and the volume is just the total result. Oh, here we go. You just saw that,
There
right?
we go. Yeah,
there
yeah,
you go.
yeah,
So
yeah.
big block of
That's
transactions,
what.
and you saw the volume spike up. There we go.
Yeah, that's what I was asking. You see that
Yep.
bar in the bottom, and then the time and sales is just all red. So yeah, that answered my. I
Yep,
appreciate.
and just so you know, the colors and the time and sales don't necessarily correlate to buys and sells.
Yeah.
It's kind of an approximation. But if it's a red time and sales, it means the transaction happened at the bid, and if it's green, that means the transaction happened at the ask. So right now the bid is 60.3375, and the ask is 34.00. So we see these transactions are happening at 50. Oh, those ones are at 34.00 and 25, which was the ask. So again, it's really hard to like keep track of all this, especially when everything's all over the place. But that's high level what's happening. Does that make sense?
Yeah, man, I appreciate it. Thank you.
I'm trying to think about what you could compare this to in real life, and I don't have a great analogy for this one. I usually can pull some out of the hat, but I feel like I can't today. I don't have anything that's coming to my mind. So I'm sorry, but hopefully that makes sense. If I could explain it any better, definitely let me know.
Yeah, and like the time and sales, it doesn't always like dictate the price where it's gonna go too, because they can change
100%.
right away.
And I will say, like, time and sales, like the people who look at time and sales on level 2 only are super gifted. I'm not one of those people. If you just gave me time and sales on level 2, it'd be real difficult for me. But there are groups of traders who literally only look at time and sales on level 2 and are incredibly successful doing that. I'm not one of those people, but there is definitely information that you can get that's real significant from this. But I'm not an expert, so I'm not going to act like I am. Peter says, how to customize or set different screens in TOS Web. I personally hate TOS Web. I would actually recommend not using it. I would just install the application if your computer can handle it, only because TOS Web is like super, super limited. Yeah. This is an interesting question by Colin. What do people use to see when the order amounts of when a fund, or for instance, makes a big order? A lot of people alert when someone does a big play. Yeah. So what I think you're referring to is probably either flow or like dark pool transactions. So that is all typically from like some flow service. I got signed out. Well, anyway, hopefully this is good enough. Okay, yeah, 15 minutes late. We can work with that. So for example, this unusual whales flow service basically shows us the big transactions that have taken place. Well, depends on how you filter it, but I could filter for like a size, and I could go to dark pool somewhere, stock data, probably dark pool feed. Okay, I'm viewing data from 2 days ago, whatever. Okay, I'm not getting anything. I don't know why this isn't working. It's have to find out how to sign back in. Anyway, this is basically that. So there's a bunch of flow services. I don't personally use this one really at all. I just kind of have it sometimes, and clearly haven't used it in a while because I'm not even signed in. But this is basically how people do it. They look at these flow services and they can get alerts. Also, TOS has a built-in feature, which is called, oh God, what is it called? Trying to remember. It's called Trade Flash. Let's look that up real quick. So the TOS Trade Flash, this one, let's see if we can even pull it up. I don't want to figure that out right now. But the Trade Flash also, it's like a built-in thing that shows large trades. So you could look for that. You could also run like scans. So for example, one thing that you could do is you could go to like a scanning thing. If you just go to, let's see, what am I looking for? Finviz. And if you go by, let's see, let's just go to energy for now. And let's just say relative volume over 2 sectors, any price over 5. Let's actually say relative volume over 10. So this is going to be the names where volume is 10 times the average. So obviously that means some institution is trading them. And let's say market cap, let's just check large. Okay, we have one name, right? JM and Smucker. Let's drop that down a bit. So these are the names that traded on 3 times their average volume today. So we have KEP, SAN, SJM, and IoT. IoT is the only one that I'm actually familiar with. So let's take a look at what this actually is looking like, IoT. So this one traded 3 times its average volume. So obviously we don't know why or who, but we know it traded 3 times average volume, which that's obviously a big deal, right? It's not just mom and pop that are buying this name right now. 3 times average volume is a massive thing. So what you could do is, just start taking a look at it. It looks like it might be at some decent support on the weekly. It looks like it's holding that today. And it also is generally trading pretty high volume. It looks like it has these days often enough with earnings. So anyway, we just found a name that's clearly had some big trades going on today. So we could add that to the watch list for the future, right? Maybe we want to structure some kind of trade plan based on this. Maybe we take a look at the hourly and see overall, it looks like it had a real rough after hours and mostly just kind of rebounded today. So anyway, there's one thing that we could do to kind of look into that a little deeper. And you could even expand it a little bit. So you could say just 2 times average volume, and we'll probably get a little bit more interesting names that we're familiar with. CCJ, that's a pretty big one. That's a uranium name. I actually can't believe that one's at 63. Wow, I actually want to open that up really quick. That's ridiculous. Wow, that's wild. Yeah, so this one's pretty hot today, which maybe makes it think of some other uranium names, like what's the rest of uranium doing? This one, not so much. Sorry, I'm getting distracted. I'll stop. Anyway, hopefully that answers your question, Colin. So the first one that we showed, Unusual Whales, that one is paid. The Trade Flash and Thinkorswim, that's completely free. And the FinViz, that's completely free. And you can see we found 2 reasonably familiar names that weren't just, some random stocks pretty quick. Oh, wow, RBRK too. That's an interesting one. Actually, that's another one I want to look at right now. Wow, that actually looks pretty rough. Rough earnings on this one. Huh. God, okay, I gotta not get distracted here. But anyway, this is how I would scan for that sort of thing. And I like FinViz a lot, and it's basically completely free, so you don't even have to pay for it, and you could find these sorts of high volume opportunities generally pretty easy. Only problem is you got to wait for the daily close, so hopefully you can afford that. And you could also sort just for, you could look for your favorite penny stocks too that are trading 10x volume. If you want to get into this department, if you really want to lose some money, SafeX, Lakes looks pretty hot. Anyway, any other questions? Now we kind of deviated from the PowerPoint a little bit. Oh yeah, real world examples was the only other thing that we wanted to talk about, which covered a decent amount of those. Any other questions? If not, we'll go to some of the things that we had earlier. I know Amardeep asked about RTX. Viral said, ooh, Pepsi 815 calls. Yeah, we'll look at that. Let's see what's going on there. Ooh, into earnings too. Wow, actually, this does look kind of interesting. This is normally a name that I would probably stay away from, to be honest with you, but this is very interesting to me. I love these sorts of names that are sitting at long-term support like this. This is very interesting. I'll tell you now, Viral, this is typically one that I'd be concerned about, but I like it. I mean, it's Pepsi. It's not, a super high risk name. It's not like it's a shit company or anything. They've made a couple big acquisitions recently. I don't know much about the name, honestly. I don't look into it really at all, but I love how it's at this real strong support. I mean, you got your risk so well defined. You just stop out on a weekly close below 128.50 and move on with your life. And over this 132 spot, you're looking pretty quick towards 136 and 140. So normally I don't like trading weakness. Just not something that I like to get involved with. But this idea, I kind of agree here. I mean, obviously the ideal entry would have been on a day like this where you actually hit that weekly support. But I don't mind that, actually. I hope Viral's still in here. Oh, he's not. Not even in here. God damn it. It's a waste of time. All right, so RTX, let's look at this one. That was the first time someone said your name right. It's not that hard. Just sound it out. Americans are challenging. Okay. RTX. Let's take a look at this one. So let's just focus on this from a kind of volume price analysis lens. So let's just look at what's above average here. So we have this day, this day, this day, and these 2 days really to pay attention to, right? Our average is kind of somewhere around here. So these are our above average days. Let's take a look at just kind of our key levels, just very roughly. Let's also zoom out to the weekly real quick. Okay. So we're at all-time highs, so that's a pretty big deal. Defense contractor, obviously defense is not necessarily obviously, but defense is a pretty hot industry right now. And let's take a look even at some moving averages. So it's a little bit extended right now, but it's in a pretty powerful trend as well. I don't hate it if it gets back down to this 136 area. You could definitely make the argument that would be a failed breakout, though. And it is kind of holding where it needs to at 138.85. I don't know. I feel like it's definitely a trade that you could take, but it's not my favorite trade. And the reason that I say that is I prefer names that have a little bit of like tighter consolidation after a trend like this. Like, for example, even the S&P exhibited that. Like, there's a pretty clear, nice, like tight pattern that formed here. Hood's even a decent example of that. Like, for example, a nice like actionable pattern that formed at all-time highs. I don't think Hims really did that, but a lot of these kind of recent power trends have exhibited similar characteristics. Let's think. What's that other one? Can't think of it. I mean, Brow did something similar too. So when a name's in a strong trend like this, I like to see some kind of consolidation so you can really see that base kind of begin to firm up. And at least in the example of RTX, it's in the middle of a trend. So to me, at least for me, right, it's harder for me to kind of justify an entry when we've only really seen 1 day down. Like I'd be more excited or interested to get involved once we see like a little bit of a mini base form like that, which we're not really seeing that yet. But I mean, all things considered, right? It's in a bull trend. It's above all-time highs. Well, it was above all-time highs, and it looks generally strong. But I don't know if I love the entry for me personally. But I mean, that doesn't mean it's not going to go higher. It looks in general like it wants higher, but for me, it's not something that I'd enter right now. Hopefully, my explanation as to why makes sense. All right. Any other questions before we call it and basically move into our next class next week, where we basically only talk about examples and nothing else, and only talk about trades and trade plans. It'll be very little PowerPoint and maximum application. So hopefully it'll be a fun one for everybody. I know I'm looking forward to it.
All right, brother. I appreciate it, brother. Thank you so much.
Thanks so much, Dennis. Hey, I really appreciate
Thank
you
you.
being an active participant in these last few. It's made
Yeah.
it real fun. So I appreciate your time, my friend.
It's for sure. Thank you for your time as well. Appreciate it.
My pleasure. My pleasure. All right, everybody. Well, I appreciate you guys all being here, and I hope to see you all in our next one. Have a great night, everybody. Thank you so much.
You too. Enjoy night.
Adios.